First of all, let's start with a brief review. Key indices ended flat as on the last trading day of the 2012 as investors remained concerned that US lawmakers had not reached a budget deal just hours before the deadline is set to expire. There were fears that the US economy could slip into recession if $600 million of taxes and spending cuts, dubbed as the fiscal cliff, came into effect automatically on January 1st. Investor sentiment took a further hit on the back of 16.9% year-on-year rise in the government's fiscal deficit to 4.12 trillion rupees during April-November. Nifty entered at 5,905, which was down 3 points, and the Sensex closed at 19,426, which was down 18 points. Turnover in the cash market was 93 billion rupees compared with the 118 billion rupees on Friday. Gains in real estate, power and auto stocks offset losses in those of capital goods, fast-moving consumer goods and information technology companies. Mid-cap and small-cap shares outperformed the large caps. Firm rubber prices supported the gains in the tire manufacturing shares, with Apollo Tyres rising more than 3% to 89 rupees. Kingfisher Airlines fell 2.3% to 14.90 rupees on news that its operating license will lapse soon. Before moving to today's outlook, let's have a review on 2012 trading year. Actually, for the Indian equity market, the year 2012 was a year spent trapped into progressively higher range as investors waited first for signs of European financial crisis abating and then India's government's fiscal action on the policy front, rate cuts by the RBI and finally a resolution of the US fiscal cliff. After months of range-bound trade, Indian benchmark indices Nifty and Sensex registered gains of 27% and 25% respectively this year, whereas the Indian rupee appreciated 3% against the dollar. BSE mid-cap and small-cap indices outperformed the benchmark indices, rising 39 and 33% respectively. The real boost for the equities came in November when the Nifty crossed its psychological level of 5,800 mark as the political logjam over allowing foreign direct investment in multi-brand retail entered, which gave renewed hopes of reforms from the government. Equities also rose after Eurozone lawmakers approved the release of further bailout funds to Greece and US President Barack Obama expressed confidence that his administration would reach a budget deal with the US Congress before December 31st deadline to avoid the looming fiscal cliff in the country. Investor sentiment also got additional boost from the Goldman Sachs upward revision of India's rating to overweight from a market rate, with the investment bank saying that it expects the Nifty to hit the 6,600 points level in 12 months. On the economic front, hopes of rate cut from RBI gathered steam as India's headline inflation rate based on the wholesale price index fell to a 10-month low of 7.24% in November. However, the central bank kept key lending rates and repo and reverse repo unchanged in its last policy review meet. Hopes of rate cut have boosted Bank Nifty towards the end of 2012. So far, Bank Nifty has risen 56% in 2012. So in 2013, market participants look forward to an at least 25 bps reduction in repo rate and some kind of lending cut in its upcoming policy review meet, which is scheduled on January 29th. Coming to today's outlook, equity market has really got something to cheer up today as we got a very good appreciation in US market. Today, the global market may provide helping hands to the domestic market because US shares indices rose sharply as the Democrats and the Republicans were seen close to the fiscal deal, arriving at a consensus on measures to reduce the impact of fiscal cliff on the country. Actually, the fiscal cliff refers to $600 billion worth of tax increases and spending cuts that are automatically supposed to come into effect today and threaten to push the world's largest economy back into recession. Reports said that an emerging deal, if adopted, would raise $600 million worth revenue over the next 10 years by charging higher taxes from individuals earnings more than $4 lakh dollar and households with the annual income exceeding $450,000. On Monday, US President Barack Obama said that Republicans and Democrats were very close to a deal but haven't signed anything yet. So market expect that the US lawmakers could reach a consensus on the issue later in January, so which could be made effective retrospectively and styled over the so-called fiscal cliff in the country. So this optimism spread across the country and it lifted major indices and commodity prices up, whereas the US bond prices dragged down last day. So today, tracking the global market, we can expect a positive opening and gains in the equities are likely to remain capped as investors will continue to remain cautious over the final outcome of US budget deal. The NSE Nifty is seen at 5,820 and 5,920 range. If index tops a crucial resistance of 5,950, it may further surge to 6,000 levels. In spite of the uncertainty surrounding in the global economy, market participants remain very optimistic about the Indian equities, and we expect that the Nifty would reach 6,000 and 6,060 mark in the coming trading section, because technically Nifty was trading in a narrow range with the facing stiff resistance at 5,950 range. It was trading around that resistance level, and a market is really waiting for a breakout above this range, because everything seen positive in the market, especially from Indian perspective, and global outlook also is coming to positive because of the fiscal cliff, and the US lawmakers is likely to solve the issues which is prevailing in the US market. So if the US market comes with a positive surprise, we can expect a breakout in Nifty above that 5,950, and a convincing close above 5,960 range would drag the Nifty to 6,000 mark, because last month we witnessed Nifty future crossing 6,000 mark, because it touched the 6,005 range, but the Nifty spot was unable to breach the levels. So if the US market comes to the positive surprise, we can expect, we can see Nifty spot closing 6,000 mark, and it may further lead to 6,005 levels. And option data also suggests a positive build-ups, long position build-up in the Nifty future. And as I told you that Indian perspective, everything is looking positive. So once we get a correction, it can be taken as a opportunity for accumulating good stocks. So with all this, let me wind up. I wish you a happy trading day, and especially a happy and prosperous New Year's to all of you. Thank you.